All right, before we go making ratio comparisons on these two companies, I want to briefly walk through the financial statements for Coke and Pepsi. And this is for calendar years 2012 through 2016. KO is Coca Cola, PEP is Pepsi. Those are the stock symbols for these two companies. Coca Cola has lower revenue than Pepsi. Right, Pepsi's been about 65 billion, and the latest year is about 63 billion. Coke 48 billion. It's dropped down to about 42 billion. Even though there's a difference of about $20 billion a year in revenue, Coca-Cola still is earning roughly the same amount of net income. In fact, it's higher in most of the years. It's dropped in the last. So there's going to be a difference in the in both the gross profit margin, which is the gross profit divided by sales, and the net profit margin, net profit divided by sales. I have an abbreviated cash flow statement taken from the 10Ks from both companies. Cash flow from operating activities for Coca-Cola was about $10.5 billion, and you see a drop in the latest year. And Pepsi's is basically the same amount, $10.5 billion, but it's up from 2012 and 2013. The investment in property, plant, and equipment is much higher over in Pepsi than it is in Coca-Cola. We also see some interesting numbers here with respect to financing activities. If we look at common stock repurchased and dividends paid, that's about $10 billion. And for Coca-Cola, it runs between $9 and $10 billion each year. For Pepsi, roughly $6 billion, the sum of the common stock and the common stock repurchase and the dividends paid. So it's higher in 2014, but for most years, Coca-Cola is returning more money to shareholders. The free cash flow is calculated by taking cash flow from operating activities and then subtracting the amount of cash they have to invest in property, plant, and equipment. And that's one of those common abbreviated measures of free cash flow you see out in the real world. And you can see Coca-Cola is about 8 billion, 8 billion, 8 billion, 8 billion, dropped down to 7 billion. And Pepsi's is actually fairly close but getting larger. All right, looking down at the balance sheet, total assets for Coca-Cola are higher than Pepsi. And remember, Pepsi has about $20 billion more in sales, but Coca-Cola has more in assets. And where are those assets? A big difference in here is other non-current assets, which we'd have to dig into a balance sheet to figure out what that is. The net fixed assets are higher for Pepsi. Total current assets are much higher for Coca-Cola, especially the cash number. If we look down in the liabilities for both firms are very similar, about 53 billion up to 64 billion, and we see the same pattern over here with our friends at Pepsi Cola. Pepsi has a materially higher amount of accounts payable. If we look at short-term debt, look at that with Coca-Cola. That is a lot of short-term debt relative to Pepsi, and Coca-Cola's short-term debt relative to its long-term debt. Coca-Cola tends to use more short-term funding in their debt. Short-term debt tends to have a lower interest rate. That's the good news. The bad news is that the interest rates can change really quickly with changes in the marketplace. All right, so the long-term debt is more similar for the two firms, but the short-term debt really different for Coca-Cola. If we look down at shareholders' equity, the equity at Pepsi is going to be lower. Now, remember, the liability is the same for both firms, but the total assets are much higher for Coke, and that's why we see such low, the lower, relatively lower equity. If we look into the treasury stock, that's the share buyback activity, and we can see that where those share buybacks are showing up in the balance sheet. A couple other pieces of information that we can get out of here. I also took the average share price during 2016, 15, 14, 13, 12. Now, Pepsi's share price is higher, but they have fewer shares. You can't really compare the dollar amount of a per share price because Coca Cola tends to split their shares more often. Anytime their share price approaches $100, they split the stock, which creates additional shares. However, if you multiply the share price times the shares outstanding, you get market capitalization. Now, the market cap is simply the market value of all the shares outstanding. All right, and you can see that for Coca Cola, it's about 100 billion, 110 billion, 116 billion, 115 billion, 117 billion. Pepsi's is materially higher, 105, 118, 134, 137, 147. What we could also see is that the growth rate is different. And I'm going to do a quick graph in here. If I copy these numbers down. I'll take the market cap for Coca Cola. So this is Coke. I'll use this. I use the names. And then I'll go get it for Pepsi, and then I'm going to have to sort it because to predict the numbers it has to be in ascending order. Alright, so that's Coke, that's Pepsi. And I'm going to sort them. Right now they're latest year first, furthest year last. I'm going to sort that so they go in order. And then simply graph this using a line graph. And I will put this into a new location. Make it easy, a little bit easier to see. Alright, Coke is the blue and Pepsi is the red. I can also forecast using Excel if I just add a trend line. And I'm going to use a logarithmic trend line. A logarithmic trend line is one that increases at a decreasing rate in the material we have here. And I'm also going to forecast ahead 3 periods. Display the equation and how well the numbers fit. Alright, so I've got that for Pepsi, or for Coke rather. Going to do the same thing for Pepsi. Add a trend line for them. Same type of trend line. Same 3-period forecast. And also display the equations. Now the equations are hard to see in here, so I'll make them a little bit larger. I can forecast in my spreadsheet by just copying the equations over and going from there. Alright, so the formula for Coca Cola, this is the one with the blue line, it's 10,681 times the natural log of the year number, and in this case the year numbers are 1, 2, 3, 4, 5, 6, 7, 8, 9, etc. And then a fixed amount of 101,545. I'm going to just copy this over into the statement, and that's the one for Coke. I don't want to wrap it. If I number these 1, 2, 3, 4, 5, 6, 7, 8, those are the years. The natural logarithm function is equal ln, open parents, and then pick the number. The natural logarithm of 1 is 0, so that's your intercept. Notice that it increases, but at a decreasing rate. So for the Coke forecast, the formula is equal to 10681 times ln x plus 101,545. And I'm going to forecast out the forward 3 years. And you can see that's the one that'll match Coca Cola here. Expected to grow up to about 125 billion. If I do the same thing for Pepsi now, that's this formula. If I forecast that for Pepsi now, you can see that the growth part, which is this the growth part is this first term, the one you're multiplying by the trend number, is higher. So 25770 times ln x plus 103,744. They start about the same place, little over $100 billion, but over an 8-year period, you can see Pepsi growing faster. So there's a lot of information available out here, and there's a lot of tools in Excel you can use to go evaluate these numbers. But the trouble with working with just the numbers themselves is that I can't really measure the relative size. For instance, Coke has sales that are materially lower than Pepsi Cola, but their assets are materially higher. So that's why we use ratios, and that's what the next video is going to address.